Okay, now looking at this now, this is a typical example of an uptrend, right? For our uptrend, right? Look at this. This is our This is our swing high. Let me change the color. This is our swing high, right? And these are our swing low, right? Remember what I said? There should be a Deriv pattern here. This is our first lower candle here. This is our second one here. So this is our swing high here, right?
Okay. Yes, sir.
You mark it out like this. So automatically this is going to be the range. And if you are coming from the downtrend now, this is our what? If you are coming from the downside, this is our what? This is our swing low here, right?
Yes, sir. Yes.
And these are what? These are our swing high here.
Swing high.
Right. So if you are going to be in a downtrend, we expect them to break this swing low, right? They should come and break this. The market should just come down like this and break this swing low. They will have a retest and work like this, right? If you are going to be in a downtrend. Okay. But if you are going to be in a downtrend, that means they will have to take out this high here. Right? That means they have to take out this high here, and which is what we did have here. All right. This was the candle that broke the structure. This was the candle that how we can see more clearer now.
Yes, sir. Yes, sir.
So this was the candle that broke this structure. So this is our what? This is our BMS here. This is our BMS here, right? And when we have our BMS here, right, we take what? We take note until we have a swing high here, right? A swing high could have been this one now. Now remember now, the last swing high will always be your what? Your higher high. The last swing high that broke the market structure, right? Will always be your swing high. And the last swing low. So now by the time we will have taken this, but now look at it. There was another candle that invalidated this because this will have been our swing high, which this will be our lower low, our swing high, and our lower low here. But look at the next candle here. It actually broke this high, so automatically invalidated this. This is not going to be our swing high, right? We'll continue down again. We'll still have it like this, right? If you say we actually wanted to use this now, this is going to be our lower low, right? Our swing high, lower low, right? Now the next one candle here, we can still confirm that it's not here. But when we have this banner, it actually broke this structure here. So mechanically is going to be our swing high.
Swing high, yes.
Right? So if this is going to be our swing high now, what you need to do is just that you take out your horizontal line and mark it out like this. So this is going to be our range, right?
Okay.
For our higher high. Then you look at this expansion here now, right? Or whatever you want to call this movement here now. This is our what? This is our swing low. We have a lower low here, right? A swing low here and a lower low on the left side. So mechanically this is going to be our lower low. Remember the Deriv pattern must confirm the two structure for you. We have our swing low here and we have our swing high here, right? Or should I mark it out and so that you see?
It's okay if you mark it out.
This is our Deriv pattern. This is our Deriv candlestick pattern, right?
Okay.
And for our swing low, right? And for our swing high now, we'll have it like this. This theory here, right from this. So this is our swing high. Remember the pattern that I drew for you now. That will always have it like this. For a swing low, it's always going to be like this, right?
Yeah.
And for a swing high, we always have it like this. This is the same thing that we're having here.
Yes.
Right?
Okay.
So this is you mark out the low of that swing low, mark it out. And the high of that swing high, that will be your that will be your range. Right? Okay. That will be your range. So now, if the market is going to be in an uptrend, right, we expect them to be breaking this. They should break this swing low. If it's going to be a downtrend, and it's going to be an uptrend, they should break this swing higher. Right?
Okay.
Then this is what Oh, fortunately now market just reversed after giving us this swing guy and gave us this another swing low here, right? Remember the last week will always confirm your range for you, will always be your range. This is another swing low here. The first candle was this, right? A lower low, swing low, lower low at the right hand side, right? So this is our swing low. So automatically now, this market here now, if we should have a break in market, so when we have this break in market structure with this candle here, automatically you adjust your range. You bring down this horizontal line to this swing low here. So this will become our new range here, new low here, and then we'll have this break in market structure. We'll be looking for the last swing high, right, to give us the upper hand, the higher high for us, right?
Okay.
And we did have the last swing high here, right? So you mark it out like this. This will be your range. This will not be your range here from here now, right? This is the swing high here, right? Higher low, right? With a swing high here and what higher low, higher high here. So this is our 3 bar pattern here to confirm our swing high, right?
Okay.
And this is our
there
now.
Must be 3 bar pattern.
There must be a at every higher high, right? Remember your uptrend is always going to be like this. This is your uptrend now.
Yes, I know. Yes, sir.
So at every higher high here, right, there must be a swing high. And at every lower low here, there must be a swing low to confirm that this is actually the range you are working with.
Okay. And when does it mean that whenever this at the swing high there, it normally make a bearish move? Hello,
I don't understand your question.
The bearish move, because at that swing high, at that 3 pattern there, that swing high there is first of all a swing, a bearish move. That is a kind of retracement before it makes another swing high.
Yes, and the market cannot be going like this now. There has to be a retracement, expansion, retracement.
Okay.
You understand?
Okay.
So for every expansion now, right? The beginning of the expansion, you must have a swing high, a swing low. This is the beginning of the expansion, right? There must be a swing low here. And at the end of the expansion, there must be a swing high.
A swing high.
So at the end of every
with a 3 bar pattern,
both at high and low, right? So after that 3 bar pattern, the 3 bar pattern will confirm the end of that expansion for you, right? And after every expansion, there will always be what? There will always be a retracement now. It's just like BTMM. After 3 days of rise, there will always be what? There will always be a reset in BTMM, right? So the same thing after every expansion, there will always be a retracement. Because the market cannot just keep expanding now.
And at the end of that, at the end of that retracement, there must be a 3 bar pattern.
Find a 3 bar pattern there, a swing low to confirm the end of that retracement for you.
Wow.
So what it's telling you now is that at this swing low now, when you have this 3 bar pattern here, this is going to be the low of that candle. That means they've grabbed liquidity already. They are not coming back here.
Okay, they won't come back down again.
They won't come back. The only thing that will make them to come back down here, and that means they are changing the structure.
Okay.
If they will be coming down here now, right? And you have a candle close below this swing low now, that means the market is changing from what? Right? From uptrend to a downtrend. That is the only way they can come back after they did this single. Look at it here now. Every single will always be like a week. So it's not necessarily that they use this week here, this little week here, they use it to grab liquidity. That's what they are telling you. Yeah, they only use it to grab liquidity.
No, sir, I'm Forex meeting. So even no network I did home. So might just shift to the table. Oh, sorry, sir. Sorry. It's okay. I can leave. I'm sorry.
Okay, said you are disturbing it.
Yes, sir. Yes, sir.
Once you get a new location,
Continue, sir. Yeah. Let me change my location. Yes,
then once you get a new location,
okay, sir.
so at every at the end of every expansion, right?
Yes.
There will always be a retracement. So the door will confirm the retracement for you. There will always be a synchro here, just like we have here.
Yes.
This was the expansion, right?
The
beginning of and here this was an expansion here. Then we have this retracement now. What actually confirmed the end of the retracement was this 3-bar pattern here, which was this red candle, this and this, right? Which will confirm
yes,
it confirms. So we'll mark it out as our range, right?
Okay.
And then the former expansion that we have now, right? This was the range of it. This was our swing high here with this as our higher low, right? Our swing high and our low here. So this was what the range of it. But this kind of came out and break the structure here, right? Goes above this one, telling you that this swing high is no longer valid again, right?
Sure.
So you are waiting for another last swing high to confirm the end of this retracement for you.
Okay.
Which we did have at this area here. So the way we have at this area here, automatically our range will now be from here to here. Right?
Okay.
So the same thing will happen here. This is the swing high. We have it like this. Right? At every swing growth, we always have it like this. So if you are in an uptrend, the market will actually be breaking the what? The swing high. We're breaking the structure high. Right? That's one thing. So if you're in an uptrend, market will breaking the structure, but high. You always have to break market to the upside to be taking out the swing high. Right? You always have the structure to taking the structure at the swing high. So that's for your uptrend.
Okay. Like now, at that last swing high.